Sandip. Hi there, morning. Yesterday was a pretty rough day for the equity markets. How are you looking at the PSU banks in particular hitting a 9-month low? Do you believe that there is going to be more pain inside? We just had reports coming out about SBI continuing to remain the top pick among the PSU banking space. Would that strategy hold?
In fact, Aman, if you look at the results of the entire PSU basket, except for SBI, where the results were somewhat moderate and the NII growth also was not so great, most of the other PSU banks actually reported results which were quite good. And I think I also tracked some of the results, although I don't buy PSU banks so much. But Bank of Baroda results also seem to be quite good in terms of both growth, NPA, as well as NIMS. So, so I guess if one is looking for value in that sector, maybe that bank does offer value.
Okay, could see some value emerge at least within PSBs. But Sandeep, what about the overall market? I mean, yesterday, of course, the big shake-off, I guess, was triggered by the Adani news. But other than that as well, we're back at that 5,000 sell figure from the FIIs.
Yeah, so yesterday, I guess because of this news, we had to get some selling, and many of the other some sitting on the sidelines, etc., could also have sold because of this news. So I think it's becoming tough to actually predict when this would subside because the allocations to India seem to have gone down substantially. And now a lot of the funds flow also will depend on what GQG decides to do with its holding in Adani companies, which are estimated at around 45,000 crores. So I think that could be a near-term concern for that group. But overall, I think we don't need to track funds flow so much because when markets were at all-time highs, they were looking frothy. Now, at least on the large cap side, clearly the markets look decently oversold. And for this year, markets up just 7%. Last 3 years, CAGR is just 10%. So I think a lot of the froth has gone away. And to that extent, markets are reasonably placed now.
Interesting. Sandeep, you've talked about as to how you believe some of the private banking names, a Reliance Industries, even an L&T is looking attractive. Have you expanded your list within large caps? Because the market doesn't seem to be rebounding.
So I think, see, there are some companies which are doing well, they are outperforming. Like M&M has done well even in the entire sell-off. And because of the strong growth outlook, I think that company will continue to do well. I would think that Bajaj Auto has sold off substantially, like it's down nearly 30% or 27, 28% from the top. The wedding season and the rural demand should pick up somewhat going forward. So I think that's also reasonably priced. Bharti Airtel looks well placed. So I think all these stocks among the large cap universe look to be stocks which can potentially deliver maybe 15% plus from here.
Meantime, we can't stop or really can't ignore what's happening when it comes to cryptos because they're on a tear ever since Trump's victory in the US presidential election. Bitcoin is now inching towards 100,000 mark as it went past 99,000 for the first time, $99,000. Let's understand a little bit more about what's fueling this rally. Sharad Dubey is joining in. Sharad?
Well, yes, Bitcoin is in focus and it's almost about to reach the $1 lakh mark. Now, interestingly, the Bitcoin had touched the $99,000 mark last night and it has actually more than doubled this year as well. Now, also, the crypto market, that itself is up 4% in the last 24 hours with the global market capitalization coming in at $3.26 trillion. Over the last 3 months, the crypto has been on a tear, the entire space. If you look at the numbers, Bitcoin is up 60%, Ethereum has jumped 20%, and even Solana, that has also jumped more than 60%. Now, what may be the key reasons for the rally in Bitcoin? The first one, of course, is that Trump has been very vocal when it comes to the digital currencies, and he has been vocal throughout his presidential campaign, and after that the rally had started. Interestingly, Trump's company is in talks to acquire a crypto trading firm. It's called Bakht. Now, Bakht is actually backed by NYC owner Intercontinental Exchange as well. And over the last 4 to 5 months, we have seen there has been a significant institutional positioning also as per the traders, and they have stated that the spot Bitcoin ETFs have been in favor with large participation coming from institutions. Also, interestingly, if you look at how the other asset classes have performed, so we have taken this year dollar returns as the basis, and for that Bitcoin has jumped 135%, while international gold and silver prices are given returns between 28 to 30%. And lastly, if you look at Nifty on the dollar terms itself, that has given 5 to 6% returns to investors.
Well, Bitcoin, that surely has been one super trade this year. But the dollar has been strengthening as well since Trump's major victory, and it's now hovering around that 107 levels. What does this really mean? Is it going to sustain? Kunal and Nikunj are standing by on the wall to walk us through what their findings have been.
Okay, it's all about dollar moving higher because Trump is back. Trump means higher tariffs, strength for US economy. We know that narrative. But technically, if the dollar strengthens, which it is, what does that mean for the markets? And where is the dollar headed? Is it likely to make pause at 107, go to 110, or touch its previous high, which was what, 113, 114, right?
Yeah, 114 to 115 approximately.
So are we looking at that kind of a strength coming in the dollar where it could rush up to 110 and soon reach 113, 14?
So let's first establish, Nikunj, the relation between why dollar index is very important as a swing factor for the index. This is a relationship which has been going on for the last 10, 15 years or more for the index, vis-a-vis the dollar index trends. The recent, for example, I've taken the last 2-3 years of chart patterns just to highlight the kind of relations dollar index has and in terms of impact. So in the fag end of 2023, when the dollar index moved from 100 to 107, you saw the impact on the Nifty. The Nifty remained into a sideways range, and we corrected by a margin of 1,000 to 1,500 points from 20,000 levels. We saw similar swings when dollar index fell down again towards 100 from 107 levels. That led to the index getting back into a rally and not just breaking past about the previous highs, but starting off a very strong multi-year uptrend. The very recent one, what you saw from 107 odd mark, dollar index fell back towards 100.5 levels. That was in September 2024, and that led to the index rallying from 23,500 to 26,200 levels. So, which means that there is a direct correlation, of course, a negative correlation vis-a-vis the dollar index with respect to the index. Now, what matters over here is the charts for dollar index. Now, as you can see, we are at a cusp of a very, very interesting level. This 107 level, 3 times in the last 1.5 years, we've managed to reverse from 107 mark. But this time around, the intensity at which we're heading towards 107 levels is completely different. The indicators are not at a very similar overbought levels. The indicators are poised for a breakout or a potential breakout on the upside for dollar index. So as a technical rule, we wait for the breakout to happen. But if it happens, we could be looking at a further trigger of rally for the dollar index. And as we just explained the impact on the Nifty, it should be a negative impact for the index if the dollar index breaks out.
So what are the chances that if will become a yes?
If the dollar index breaks past about 108, so we give a buffer of 1.5% from that breakout level, if that happens. The only positive fact that over the last 10 years of the data for the dollar index, we've never seen 8 consecutive weeks of rally for dollar index. We are already in the 8th week of the dollar index rising, so which means potentially, at least over the near term, there should be some sort of a cool off, but that 108 mark remains to be a crucial resistance.
108, 108, we remember this as a line in sand in a sense for the dollar index, and for our viewers who are watching, Kunal also feels that if dollar goes above or dollar index goes above 108, that could lead to near-term underperformance in the market. So we are at that real turn for the dollar index where if it inches higher, then it will start marching forward.
Okay, interesting there, talking about the rise of the dollar index that's being assessed by Kunal and Nikunj. But Sandeep, if we were to get right back then to individual newsmakers and wanted to get in your take then on some of the stocks that are on the brokerage radar, and Apart from what we have seen with for SBI, what's your outlook then on some of the other heavyweights? For instance, Reliance Industries is also on the brokerage radar. JP Morgan has got an overweight rating, and they believe that one of the two drivers of the recent underperformance, which is the weak refining margin and the poor retail top line, that has reversed. How are you reading into Reliance's fundamentals?
Retail top line, I'm not so sure, but eventually it will recover. But refining margins clearly have bottomed out. I think they can't go further below than what we've seen over the last couple of quarters. And that bounce back holds Reliance in good stead for the recovery of its cash flows, because the large amount of cash flow for Reliance still comes from the oil to chemicals business only. So I would agree that Reliance is deeply oversold and looks cheap at the current valuations. And this is one stock which we also have added after many years recently.
Interesting. That's an add on Reliance. But Sandeep, just wanted to understand, I mean, how critical would the state election outcome be for the markets, both Maharashtra as well as Jharkhand?
I think Maharashtra elections could be important at the margins, especially given the current controversies going on. And to that extent, the markets need some sort of support in terms of continuation. So, change at helm in Maharashtra could, at the margin, be negative.
Okay, a change could be negative a little bit. The market wants continuity and they want stability at the top. But yeah, yesterday's crackdown on the Adani names. Sandeep, I know you've never recommended them, you don't own them at least. But does it seem like this fall could get exaggerated, unlike the last time when the Hindenburg news actually broke out, and that sort of gave a good entry point to a lot of investors. And last time the dip got very swiftly bought into.
Yeah, so purely looking at it dispassionately without going into specific companies of the group, I would say that when a first controversy comes, and then at that time people can ignore it also, saying that uh, there could be various factors which are not sort of purely well intended or well researched because behind it. But when it happens for the second time and some federal agencies involved, then it becomes difficult for it to be ignored. And I think that could remain an overhang for some time. So people need to be cautious, and I'm not sure how much these stocks can fall, or but overall, given the news flow, near-term fundraising in terms of equity fundraising as well as overseas debt fundraising could become tougher. And since the entire group has such huge investment plans, so I think we need to see what they'll do on that, etc. So I think it's an evolving story. We need to monitor, but people should be cautious.
Okay. Well, you had impact on banks for sure, but will it be as large as what it was when the Hindenburg issue broke out? The answer to that, well, maybe or no. And Sandeep, that's where I smack an opportunity. NPA, the assumptions that Adani Group of companies will have impact on large lenders which have exposure to them, that created in a sense some panic in stocks like SBI, PNB, other banks which have exposure to them. The reality could be very different. I mean, this group is not NPA, but the market feels that there is a problem there. So if the stocks fall, especially SBI, is it a good time to buy it?
I would think so, because uh, SBI is not very expensive in purely in terms of valuation. The only thing is that the near-term delivery in terms of what results they delivered was not as great, and they have gone very aggressive on unsecured lending, and how that impacts their balance sheet next couple of years is something we need to see. But it's not a very expensive stock. So when the markets recover, I guess SBI should also recover. But if someone is looking at some preferred bets, so I would think that my preferred bets would still be banks like Axis or ICICI.
We were discussing Vodafone extensively yesterday with Sandeep, but it absolutely amazes me that where this stock has gone, from where to now, levels of 20 rupees where every large fund house, respectable fund house, bought into Vodafone Idea. What they should have done, they should have actually bought Bharti, because Vodafone Idea is down by 60% this year and Bharti is up by 40% this year. Will Bharti continue to outperform, Sandeep, because the tailwinds of a sectoral consolidation, Vodafone not gaining market share back, Jio not coming up with any predatory kind of an pricing, that scenario still is there, which means can Bharti continue to outperform from here further?
Yeah, I would think so because if you look at the data of subscriber addition, etc., I think many of these companies, even Jio, is willing to let go of subscribers who are not giving them a particular level of ARPU. So to that extent, I would think that the industry is pretty well placed today, and the established players will do well. It could also improve the cash flows of Vodafone Idea, but not take them into profits ever. So I think that's why that stock I've always said has zero equity value. But Bharti potentially, if things continue this way and capital expenditure intensity reduces, in 5 years it could be a very, very low leveraged company, and which by itself is a trigger for re-rating. So, and the stocks also corrected, I guess, around 20% from the top, 15 or 20% from the top, the current correction. So it should continue to outperform in my view.
Naresh, defense, we are not speaking about those stocks any longer. Why is that? Is the bull market in defense and railways over, Naresh?
So one of the reasons is after the fall, we've started seeing them consolidate and go nowhere. So if you look at the one which saw the largest fall was Cochin Shipyard. The stock fell from almost 3,000 down to 1,300. Just a month back, the low was around, say, 1,340. Now we are at 1,300. So it's been a slow drift. And mind you, when we have such moves, does not mean the longer term trend has changed. There could be 12 to 18 months where the stock goes nowhere, the whole sector goes nowhere. So for now, the first assumption is the bull market for the near term is over. We may not cross the same highs for at least 12 to 18 months, and maybe even longer if this trend continues. But overall, the structure has been weakened, and we saw a massive move. Every stock in defense went up 10x. You had railways stock go up 5 to 10x. And now the drift has been a good 30-40%. Whenever we see a 30-40% correction in a stock without the index falling 30-40%, that's an indication a short-term top is done or a longer-term top is also done. So for now, no point trying to dabble into these names. They may first need to make a strong base, find a range bound. Say, for example, if a 3,000 rupee stock has gone to 1,300, it needs to find a range at, say, 1,000 to 1,400 or something like a 20% band, and then we start looking at it. And we are still quite far away from it. So it will take months of consolidation before we take a fresh.
All right, stay on with us. Meantime, in the latest edition of Emerging Titans, we caught up with Priya Agarwal Hebar, who is of the Vanta Group. She discusses what the succession plan at the group looks like and much more. Take a look.
Neither of us have ever been told or ever been in a platform where my father has said that we will be taking over the business. It's not something that our philosophy or our family believes in. This is something that one earns. This is something that it's not, this company is not just my father's, it's not just something that belongs to one individual. It belongs to the communities that we're present in. It belongs to the shareholders that, of course, are a large part of our company. It belongs to the government. It belongs to many, many different, our employees. So it belongs to many different people, and they are the ones who have to decide who they feel is right to lead the company. And it's a company that will be led by each and every individual at each and every different level. It's not about one person or two people. I think the demerger is well on its way. I think it's one of the best decisions the company has taken. We have assets, aluminium, zinc, silver, oil and gas, copper, assets that each of them can become a Vedanta of its own. And I think it's time to let all of them fly. It's great for our shareholders. They get to choose pure play models of what they want to be a part of, what journey they want to be a part of. So something very, very exciting and very well on its track.
The other stock which is perhaps worth revisiting again and again, I think, is Info Edge. Sandeep, what an extraordinary story, right? It started as just a portal, job portal, started incubating businesses, Zomato, Policy Bazaar, and now some of their core investee companies are the ones which are really driving the future value of Info Edge. Where is Info Edge headed? And any other company which perhaps is doing similar kind of an investments, which is available in the public market?
I don't think so. Anyone is doing similar kind of investments, but InfoEdge has been extremely successful in whatever investments they have done, and I think that's created wealth for shareholders over the long run. And the unique thing is that most of its bigger bets have done well. So I think it's reasonably placed, I would think, although we don't own the stock, but I would think that given the track record, and if some of the other businesses also start picking up, then the stock could do better.
Stock, I didn't mention it yesterday. I mean, LIC is a large exposure to Adani, we all know that. The talk will start again, what happens to policy shareholder money, now that Adani Group stocks have come down. LIC has been flat this year, and for the quarter gone by, the numbers what they declared, I think, were not very impressive. This entire insurance space, I think, is in a state of limbo. Growth is not that bad, but yet markets are still not very clear in terms of where the insurance companies are headed. SBI Life, Star Health, ICICI Prudential, or ICICI Pru as we call it. None of these stocks have had a very fantastic year per se. In fact, off from the recent high, flat for last 2 years, and stocks like Star Health have actually given negative returns. Max Bhupa Niva, I mean, Max is the old one, but that's the other one which has gone public. Max Financial Services, largely part of Axis now, but that's the way some of these stocks have moved. Sandeep, is it time to cherry pick in the insurance sector? Nobody likes it, but everybody needs insurance.
And that's true, but the only thing is that the results of these companies, their growths, all of sort of faltered to deceive, like in the sense that everyone had higher expectations, but the delivery is not there in terms of profitability ratios, in terms of the growth, which has been come in spurts and been very sporadic. So I think that's the bigger issue, because this was supposed to be the sunrise sector in the financial sector, but actually hasn't turned out to be.
Okay, meantime, let's also focus in on some of the other large caps. And in the spotlight, we've also got an L&T, given the fact that we have a lot of brokerages as well talking about how the domestic infrastructure spend and the execution is going to remain key. Sandeep, if we were to take the entire basket, given that we have seen the overall order momentum picking up and looking at the overall capex cycle, what is going to be your pecking order when it comes to stocks within this space? Does L&T feature at the top of the list, and what else is looking attractive?
So I think L&T has to be at the top of the list given their diversified order book, as well as the fact that they've been adding orders much beyond analyst expectations, and delivery has also been strong. So I think L&T is good. Then the other companies which are also doing well, like Thermax is doing well. Raj Industries is also something which we own. They have given a good outlook. So I think these are companies which immediately come to mind. ABB, Siemens are there. They have done very well, but then the valuations are still somewhat prohibitive for them.
Sandeep, going to let you go on that note. Thanks so much for joining in and sharing with us your take on the markets.
If you like this video, then like, share and subscribe to ET Now.